100% bonus depreciation. It might be coming back. So if you're looking at buying a short-term rental in 2024, or maybe even better if you bought one in 2023, or if you want to be like all the cool kids on social media and buy a G-Wagon or something, can you actually write it off on year one? We're breaking down all the new proposed tax changes that are coming up and how it might affect you coming up next. Welcome to Office Hours, a tax podcast by Fujikawa Associates, and we're your hosts. My name is Josh Baldovino, and I am a real estate investor and one of Derek's clients. And this is Derek Fujikawa, who's the managing partner of Fujikawa Associates. And Derek, Happy New Year! How you doing today?
Happy New Year to you too. Good, thanks. How are you?
I'm good, and I think I've shared probably like 3 or 4 people's posts now who are talking about this new change to 100% bonus depreciation. So I
Yes.
want your take. Let's jump into it.
Sure.
I think probably like the most talked about tax tip in the last few years, which is bonus depreciation. Why is that so powerful, Derek?
Well, it allows you to write off capital assets. So the IRS requires you to depreciate anything that has a useful life, right? So anywhere from 5 to 39 years. And so bonus depreciation allows you to accelerate that and expense some of those potential assets all in year one when you purchase it. So it can create a huge deduction for you.
Gotcha. So I guess the misconception is that you can buy a big piece of equipment, say like a tractor for your
Mhm.
business. And most people think, cool, I can write off the entire tractor that entire year, but
Mhm.
that necessarily isn't always the case for every single equipment. And there are
Not
some
necessarily.
rules
Mhm.
that would help you write off more on year one, hopefully giving you more of a write-off for a loss, right?
Yes. Yes.
Okay, so the article and or proposal that everyone's been sharing, this Forbes article has this here.
Mhm.
So some different tax breaks. So let's bring it down to, that's a tax credit. Where do we go here? All right. So this bonus depreciation, break down again what it was doing back in 2022 and how it decreases, how it steps down, and how this could potentially change it.
Yes. So the IRS did create bonus depreciation back a few years ago, and which allowed you to fully write off any assets that you purchased with a asset life of 20 years or less. And so, which was most equipment, almost everything other than real estate, not everything, but almost everything other than real estate and land and things like that. But and so it allowed you to write off 100% of that. Um, in the year that you purchased it. So huge deduction, right? Kind of stimulated people to purchase equipment, and you're able to write off most, if not all of it, in year one. But that was a law that had a specific time span. So they started phasing it out. The phase out actually started in 2023. So prior to 22, you had 100% bonus depreciation. Prior to that, it's evolved through the years. It was 50% at one point. It jumped up to 100% for a number of years. And then they started phasing it out starting in 2023. You only had 80% bonus depreciation. 2024 was supposed to be 60%. Goes down by 20% every year, so until it ultimately just phases out completely. But the new proposed new tax law that looks like it has a very good chance of passing. It's bipartisan and supported by both the House and the Senate. Does retroactively bring back 100% bonus depreciation for 23 going forward all the way through 2025. So that's big news, especially if you bought a lot of equipment last year, but also gives you the opportunity to buy this year and next year and still take advantage of that 100% bonus depreciation.
Oh, I actually didn't see the retroactive side. That's fun. So, okay. So from a real estate perspective, I know we did another episode where we broke down a cost segregation study with my short-term rental. And
Yes.
Derek, you helped us write off, between our partner and I, we had about $80,000 in
Mm-hmm.
depreciation that we could write off. And so this could change how you think about your investment strategies over the next couple years. If you
Yes.
want to see that video, by the way, I'll link that down below.
Sure.
So as you think about, oh, look at that.
Wow.
So they're celebrating.
That was
that's
quick.
fun. Um, okay. So if you're thinking about buying something, let me just share one more viral clip because I feel like
Mhm.
if you are interested about, if you're watching this, you're thinking about taxes, and you probably also have seen Carlton Dennis, who is, Derek, in your mind, much more aggressive in terms of his tax philosophy than you, yes?
Yes, quite a bit.
Um, so I'll play this. I'll actually upload this in post so that they can actually hear it.
Okay. And I didn't listen
Uh,
to it. I'll listen to it right now.
okay, go for it. So what's the thoughts, Derek?
So yes, I mean it's a valid. Yeah, I mean it is something that can be done. But and like I was saying, I'm probably guilty of this too in terms of the situation has to be perfect, right? Yes, you can write off $100,000 G-Wag or probably more than that. I don't know what they cost. I've never priced one out, but you could write one off if you use it 100% for business. So if you're using it to cruise around and show off to your friends or whatever, that's not business, right? So that's not
Mm-hmm.
100% business. So you're going to have to take a percentage of whatever you use business versus personal. So yes, if you buy this fancy car and use it just for business, um, then yes, you can write off the full amount, and you have to have documentation for that. And so yes, it does work. It's a huge write off if you can do it, but just be careful, and it can't be your family car and your business car. You have to have another car that you use for other purposes, and you have to keep a mileage log for all the miles that you drive to show that it is a business vehicle.
Gotcha. So it's possible. It can happen again.
Mhm.
I mean, I guess it can still happen even if this law passes. Just
Yes.
100% is better than
eighty
what is
percent or
it?
60%. Yeah, yeah.
Yeah. Okay. So then let's just assume this passes just to
Mhm.
have fun with the scenario.
Sure.
What advice then, or what things would you like your clients to think about in terms of real estate acquisitions
Mhm.
or, capital acquisitions? What things
Yeah,
would you
yeah.
want to have a conversation about?
So for real estate, really the big thing is that whole short-term rental loophole, right? So now you could do the cost segregation. Uh, you know, Prior to this law, you could still do the cost segregation, still take 60% bonus depreciation, which could be fairly significant. But now the 100% is just way more powerful now, right? So if you can carve out a big portion of the purchase price as as items that are available for bonus depreciation, then you can take all of that out as a deduction. It will most likely create a significant loss, and then you can take that against your other income. If you have significant W-2 income or other business or investment income, then you can use it against that. So
So, I mean, it seems like that was a big incentive that I feel like a lot of, especially tax professionals, were talking about for the short-term rental.
mhm, mhm.
I mean, it could be interesting to see if there's another short-term rental boom, especially in different vacation rental markets.
Yes, yes, and I mean I tell all my clients, I mean this is a huge benefit, but you got to make sure the numbers pencil out too, right? I mean, don't do it to save on the taxes and then get stuck with something that you may not be able to sell or isn't going to cash flow either, right? So yeah, I mean, it's a huge benefit, a huge bonus, but it shouldn't be the driver of your decision.
Yes, and from a real estate investing standpoint, actively managing, we still actively manage short-term rental material, participate.
Yes.
And if you're listening to this and you're like, I want to buy a short-term rental to get that
Yes.
$80,000 write-off that Josh got, your guests check in on Friday and on Saturday.
Yeah.
And that is usually the time when you're out with your family.
Hmm.
And if something happens, and all the problems happen during check-in because they come in and they say, oh man, the house isn't cleaned. How do I
Mhm.
use the hot tub? All these questions. And if you're not prepared or willing to then step out of dinner to then say, oh, sure, ma'am, sure, sir, here's how you do this.
Yeah.
Like those inconvenience for some people may not be worth it.
Yes. Yeah. You do necessarily. Yeah. You definitely have to materially participate, and um, yeah, it's not a passive or a part time thing that you have to deal with a short term rental.
But if you're open to building out those systems to hopefully at least mitigate that,
Yes.
or ideally have more than one short-term rental, because as you get more units, it does help with the scale factor, and
Mhm.
especially with the systems in place, it could be worth it.
Yes. Yes.
Um, any other things that you would think about that as people are thinking, oh, should I, buy that new equipment now? I mean, what other types of purchases could people start to consider over the next now couple years?
Yeah, yeah. And unfortunately, we're past the end of the year for 23, so there's not much we can do there. But you can always plan for this year. And yeah, any type of equipment. It doesn't necessarily have to be a vehicle. In fact, vehicles have some limitations. So, the example we were talking about, the G wagon, that's more than 6,000 pounds. So you have some. It gives you a little, allows you to write off most or all of that. But any vehicle that's less than 6,000 pounds has some limitations. So even though you have that bonus depreciation available to you, you can't use it to write off an entire vehicle if the gross vehicle weight is less than 6,000 pounds. But yeah, any other equipment, computers, office equipment, if you have a short-term rental or any type of rental, furniture, things like that, um, those will all fall under this bonus depreciation. So currently 60%, but if the law passes, then you get 100%. You'll be able to write off the full cost of those items.
Wait, actually, just clicking in my head. So then the Tesla Model Y that I bought last year,
If it's over
then that
6,000 pounds and used for business, then yes. The
well,
use for
it
business
will.
part is the part that you
I don't
gotta.
know if it's above 6,000 pounds though.
I
We'd
don't
have to check.
recall. Yeah, we're not using ours for business, so it's not. I didn't look, but
I'll double check.
yeah.
Um, but okay. And then the last thing that's changing on this, it's on this article also, was some
Mhm.
of the child credits.
Yeah, so there's some refundable child. So the actual child credit, I don't believe is changing with this new potential new tax law, but the refundable portion of it is going up, would go up with it. So
Mm,
so if the refund is, or if the credit is more than, say, your total tax bill, you can actually get a refund of the child tax credit, so extra cash in your hand, um, over and above what your total tax liability was. So um, I think it was 1,600 last year, and it'll go up to 1,800 with the new law. So it'll be a couple $100 more that you can get per child, um, refunded back to you if you're in that situation. So, I mean, if you have a larger W-2 job and, significant amounts of income, that doesn't necessarily affect you. You may get the credit, but you're going to have enough taxes to absorb it. So there won't be any issue with having to refund the credit.
gotcha. And realistically, though, in terms of the clients that you service right now,
Mhm.
who can take advantage of this, and maybe like what are the scenarios in which they should be more aware of this or not?
Yeah, I mean, I guess say you use the short-term rental loophole and you eliminated all of your taxable income with the bonus depreciation. You may not have any taxes. Say, if you're in that situation, but you have a couple of kids, so you still have income, right? You just have this huge paper loss that you can take against your W-2 income, and say you bring it all the way down to zero. Then yes, you could still get a refund of a portion of your child tax credit, a larger
Wow.
portion.
That's interesting. That's like a crazy stack. That means you're stacking
Yeah,
100% bonus depreciation on the
yeah,
short-term
yeah.
rentals. And then say you got 4 kids, now you're getting maybe a check for almost $8,000 or something.
Yeah, yeah. Potentially, yeah, on top of your, all the taxes that you paid in with your W-2 wages that you'll be getting back. So, so yeah, I mean, that's one thing. But yeah, in general, other than that, maybe I'm doing a tax return for a family member of a bigger client that maybe doesn't have any income, but I'm helping them out, and they just don't have a lot of income, but they have a couple of kids, and they may be able to get a refund on some of that child tax credit.
Okay. So some interesting changes in the pipeline. When things are proposed like this, when does that usually end up getting solidified?
So it'll have to go to a vote and then have to be signed into law by the president. So something like this, it's kind of what we call an extender bill in some ways. Like there's other things in here. Those are the main kind of talking points of it, but
Mm.
there's some other, minor credit and things like that that they'll probably extend with this. And so usually those will get pushed through relatively quickly because they want to get it done before tax season starts and before everything gets processed. So if this does go through, it should go through pretty quickly because tax season IRS is going to start processing returns at the end of this month, so it'll need to be done prior to that so their systems can be ready.
Gotcha. Okay. So if you want to get up to date about what is happening with 100% bonus depreciation as you're thinking about making some big, whether it be property acquisitions or things like that, make sure to definitely reach out to Derek.
Mm-hmm.
Derek, I will leave all of your contact information down below. So if you want to book a free consultation with him, you can go ahead and click that.
Mm-hmm.
And again, I will also link down the entire video. We are actually go through and I open up the actual cost seg study that we did for my property in Joshua Tree. And so that was a fun one where you can get Derek's perspective on it. And I ask him as a client all those questions. So if you're interested in buying a short-term rental and seeing how you can utilize that strategy, definitely highly recommend that you click that episode.
Mm-hmm.
But Derek, I appreciate you sharing the insights, having some fun reactions,
Mm-hmm.
and we will talk to the rest of you all soon. Thanks.
Good.